Yo, where the fuck did that dude Monkus Scoop go? How are you guys' habits going, by the way? I haven't asked about that in a minute. You haven't walked at all? I think walking's a bad habit. Haven't done it in ages. What's it? Jacking off. Which one of you guys clicked the porn link? Because I know it was one of you. You guys are the crash outs of all the masterminds. Got offered yesterday. Jeez, bro. Who was that? Nazillion porn Latina nudes OnlyFans link. Wait, can someone send that link? I'm kidding. Actually sounds good. Yeah, no wonder it got you. Oh my god, bro. Jeez, you guys are so dumb. Holy shit. Yeah, sounds good for real. You guys are so dumb. Did Lesno deadass click it? Lesnut. Lesnut clicked it. Lenut. Yeah, it was my burner. I was testing you guys. Lenut. Hey, Lenut. Oh, did you press it? Which book were you reading? Whatever that Discord link that dude sent. You're gonna miss this class? I know, boys. It's pretty sad. Second to last day. Tomorrow's pretty much just gonna be a big yap attack of me kind of telling you guys what you guys should do moving forward, but today's going to be a mix of some shit. TJR is gonna cry on the call tomorrow. I cried on all the other masterminds. I probably won't cry for you guys because you guys literally got scammed by a porn link in the Discord. So, no reason to cry over that shit if I'm being dead honest. Lesnut. 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 Lesnut, are you in here? I guarantee you he's not, bro. Lesnut. He's on Fortnite. We aren't all retards. Yeah. Rank each mastermind. Mastermind 1.0 is definitely the most dedicated. Are you guys 3.0? Mastermind 1.0 was definitely the most dedicated. Mastermind 2.0. Mastermind 2.0 is super similar to 3.0. I honestly think most of Mastermind 2.0 is like, they're not, like, they weren't the smartest. I think 3.0 has some smart people, but also, I think Mastermind 3.0 has, like, the best and the worst of both extremes. I think we have a lot of really smart people and a lot of, really dumbass people. So it's like either you're Lenut or you're like dialed. Really like said I'm embarrassed of being in 3.0. I ain't gonna cap. Like a lot of you, some of you guys are really dumb, and some of you guys are really dialed. Tucker, after what you did yesterday, I want to say that you're dumb, but you've been in this bitch every single day, so I think that you're like kind of a solid ass dude. Lenut, self-explanatory. Jeez. But anyways, let's get right into this. Today's our second to last day, boys. Our last day is going to be on Monday, and it's gonna be sad to see you guys go. Even though some of you guys are dumbasses and some of you guys are crash outs, I'm gonna miss you guys for real. It's like I make a little friends and family while we're in this bitch, and then I have to see you guys go, and I really never want to see you guys go, and it's like, oh no, there goes my bro. I just want to never see him go. So with that being said, I hope I see you when I go to PR next month. Yeah, I'm definitely leaving Puerto Rico next month when you pop out. What percentage of people pass their free funded after the mastermind? I think as the more people come into the mastermind, the percentage drops. Just because if you go purely based off the facts, like 90% of traders fail, and also 75% of traders quit before even like, being able to get to the point of turning profitable. Just how 90% of gamblers quit before they hit the lottery. It's gonna be pretty sad. But it is what it is. Like I think like, let's put it this way: if I had like 5 insanely committed people, I think I could turn all of them profitable, and I think I could get them to turn profitable pretty easily. Versus doing it for like 160 people, or the people in here. Some people are just going to flake. That's how it's going to go. So I hope some of you guys don't flake. 300 to 166. It was more than 300, bro. It was like 350. Wait, no, not 350. It was like 315, but still. 324. There you go. Peaked at 324. And I told you guys it would be right around half. So I was right about that. People asking for the funded are going to be the first to lose. Yeah. You said you learned from other masterminds to make this one better. What did you learn from us? I think this one was pretty fucking solid. I'm not gonna lie. I think Mastermind 2.0 could have been improved. It definitely could have been improved on, and that's where I kind of improved on this one. But for the next one, like, I really don't think that I will change. I don't think I would change much. Bro's trying to make us feel better. Nah, dead ass. I told Mastermind 2.0 that there's a bunch of shit that I would change for the next one. But for this one, I don't really think that there's anything like too serious. Appreciate that, Maury. I'm sorry about your surgery. I'm glad that you're doing better, I hope. This was May 10th. Damn, you saw me in Puerto Rico? Should have said it was good. Crash Out's gonna have millions because of TJR. I would hope so. All right, but anyways, let's jump into little trade review from today. I'll do my trade recap from today and tomorrow, and kind of go over how I found my winning trades, and kind of go over how we would have ideally looked at price action, and then from there, we can get into some of your guys' trades. Okay. Oh, you were at baggage claim with your girl? Was she bad? Be honest, was she bad? Be honest. Be honest. What? All right, whatever. literally coming over right now. I'll introduce you guys to her. Wait, let me see if she's here. I don't know. She's scared of boys, though. But anyways. Ugh. All right. Let's get started. Mr. XYH. I don't get what you guys are saying. Anyways, let's get into today and go over how we would have looked at the markets, okay? Even though I already kind of did this on the trade recap, I think it's good for us to go over this as a mastermind as a whole. Okay, so we started off the day originally with what looked like SMT divergence but turned into not being SMT divergence on the high time frame. Okay, so that kind of faked me out. But something that should have been obvious to see was two things. We made a super high time frame daily extension down, and then on top of that, we already started making the 4-hour extension down right here. So on the hourly, we were making an extension down. Hourly, we were making extension down. And on the 4-hour, boom, or on the daily, boom, we had already made the extension down. So, in turn, what would we ideally want to look for? Equilibrium of this range, or bare minimum, equilibrium of this range, which was hit pretty early on. But that's like bare minimum of what we would want to look for, right? Because we see extensions on both high time frame and low time frame without us hitting equilibrium yet. Okay, so what ideally would we be looking for? Looking for longs, especially after this high time frame leg down here. Okay, and I think that in PM session we'll probably end up getting a rally towards high time frame equilibrium if we can get up there and take out these low resistance liquidities. Wait, I need to sneeze. I hate when it just disappears. Whatever. So that was my bias going into today. I was bullish, even though on the 4-hour we looked pretty bearish, but right, we got to understand we had already made an extension down. We're going to want to retrace. So with that in mind, I was looking for longs. We had market open right here. We had some news come out. Okay, so we had boom, news come out 15 minutes into market open, and then we had news come out 30 minutes into market open. I didn't really care too much about this news. I wanted to wait for this high impact news to come out at least before I started looking for trades. Okay, and honestly today, I would rather not go over trade recaps with you guys. I would like to go over and cover some just like small little fill-in details that I don't think that we covered today. We'll go over these trade recaps, but we'll cover some things that I feel like are necessary to cover that we haven't really talked about yet, like for news. So after we do this trade recap. So anyways, we had news coming out 15 minutes into market open. That was high impact, so I wanted to wait for that to happen. Okay, we come down, and we end up sweeping out these high time frame draws on liquidity. Pretty much like right when that news drops. And then from there, I wanted to wait for the macro to get hit. And that's really all it is. It's just like from 9:50 to 10:10 is probably going to be your optimal time to look for trade entries. So we'll put that there. All right. And on ES, we had a couple things. So we come down, we sweep out this high time frame liquidity. Okay, we don't get a break of structure off of this. We don't get a bearish fair value gap invalidated. We see it get filled and price moves lower. So boom, we're disregarding this. Price moves lower, boom. We're now within the macro, awesome. We invalidate this imbalance. We break structure to the upside. This very well could have been a reason for entry. And this was my reason for entry on ES. So I went long on that. Okay, and from there, I had Equilibrium as my first take profit, which was a pretty shitty risk to reward ratio. And then I had my second take profit up at these highs right here, which unfortunately for me, we hit take profit 1. I put the rest, my stop loss at break even, and the rest of it got stopped out as we came back down. But as you can see, this would have gotten hit. And then if you wanted to hold it all the way up to these high time frame highs, those would have gotten hit as well. Okay, but we just want to go over like how we could predict that price wanted to move higher from here. So that was the first trade that I took. Pretty simple, okay? Overall, high time frame, what was our bias? It was bullish. Why? Because we had already made an extension down. We needed to fill equilibrium. From there, where did we come into? A highly executionable price range, which was high time frame lows getting swept. From there, we're looking to execute. We see a bearish imbalance get invalidated. We see a break of structure to the upside. Boom. Enter off of that. Stops underneath here. Okay. Could have waited for like other shit, but me personally, I wanted to enter off that. Worked out in my favor. Was able to hit one take profit. Got stopped at break even for the rest of it. So that was ES. And as we can see, ES ended up pushing back up. We hit these highs and we hit these highs to fulfill our entire take profit. And I honestly think price is going to probably move higher. But again, it's Friday, so we shall see. But anyways, that was ES. Now let's go over NQ. Again, NQ, same situation. We already made the extension down. I want to see equilibrium of that, of these range highs down to these range lows get filled. Okay, because we had already made the extension. All right, from there, we scale on down. We have a bullish bias. Price comes down, sweeps out high time frame liquidity to the downside. Okay, as well as being within the optimal time to trade, which is 9:50. Okay, that happens right at 9:50. From there, same exact situation as ES. Boom, we have a bearish imbalance. We also have these highs that get broken above. Okay, we could have entered off of this, which I didn't. I wanted to wait for a little bit more confirmation. Okay, or you could have waited for, boom, the disrespect of this bearish imbalance, and then, boom, this bullish imbalance getting filled and respected multiple times, never invalidated. Boom, take a long off that. Okay, stops. I put my stops right here just in case I wanted to revisit this fair value gap. And then again, my take profit 1 was based off of equilibrium. Really shitty risk rewards for me today. I talked about that in the trade recap, but it is what it is. I had my second take profit based off of this order block right here. See, we have the leg up prior to sweeping liquidity and breaking structure to the downside, which we see ends up getting hit, but that's after the rest of my position got stopped out at break even. But we can see price ended up moving higher and taking out, boom, highs right here. So again, how were we able to see this? Let's go through the entire thought process. Why was my bias bullish? We had already made an extension to the downside, so we needed to have a retracement up to fill equilibrium before going down further. Then, where was our highly executionable, like medium time frame price range? Sweep of high time frame liquidity, right there. That's our price range that we're looking to execute off of. We scale down. We see a break of structure. We see a fair value gap get invalidated. We see a bullish fair value gap get filled. We see rejections out of it. We enter off of that. Okay, we fill equilibrium, and we end up going higher. We hit this order block. We end up taking out high time frame liquidity. So that's how I saw and looked at the trades from today. Again, as the mastermind wraps up, I highly recommend that you guys continue to do trade recaps by yourself in your trading journal that you guys should still be documenting. And then on top of that, I recommend you guys be looking at my trade recaps because I pretty much go over my entire thought process for every single trading day on YouTube, okay? So from there's a couple things that I want to talk to you about. First things first, I want to talk to you guys about news, okay? So how do I go about trading news? Do I trade it? Okay, I feel like a lot of people have just like different opinions on what my thoughts are on news, so I'd like to clarify that with you guys, okay? So, first things first, let's talk about news that I won't trade on. You guys will see that in the 1K to 10K challenge, I ended up breaking this rule, but for the most part, I don't trade on these news days, okay? The YouTube video, it was just for a challenge, okay? Like an account flip challenge. So, I do not trade on CPI, which happened last week. Okay, so when we have core CPI coming out, I don't trade on these days. I'm moving more towards being able to trade on PPI news days unless there's a huge move. So if we go back to CPI on Wednesday of last week, just see what it did to the market. So okay, so this was CPI news data. This happened during pre-market. So pre-market opened at 8:30, and this is when CPI news data came out, and it just ripped up. And then when market opened, this is what it did. This is the market open candle. It opened, it pushed up, and then right when price got into the macro, which was 950, consolidated for pretty much the rest of the day. Not something that you necessarily want to be trading. That's just my opinion. Some people are like, oh, there's extra volume into the market. And it's like, bruh, me personally, I would like to stay away from trading high impact news data. So that's what I do. This was PPI, 8:30. We can see that there's not nearly as much of a drastic move. We can see that, hey, there's a 5-minute candle that's a little bit abrupt, but not nearly as fucking crazy as CPI, right? This was PPI compared to CPI, right? Pretty big difference. So on a day like this, I'll probably be more open to trading, especially when it gives us good price action like this. But again, if PPI gives us something that's like this, I'm just going to avoid trading it. Whenever you see news that causes a really big, really drastic move within the market, there's no point in trading. The majority of the volume is going to be sucked up by that news drop. And also, on top of that, like after, like your bias is going to be conflicted by news. Everybody that like tries to make fun of me for not trading news is just a fucking dweeb because they don't have as much capital as me. So they're trying to make as much money as they can on every single day possible versus like me, I can take high confluence trades 8 days out of the month, smack the fuck out of it, and be okay. Versus these people are still trying to make like 5K a month from funded accounts, right? There's a difference. And if for you guys should be no different. You guys should be trying to trade like a profitable professional trader does. So in turn, I would advise you guys to try and stay away from news data that really messes up the market. Okay, so CPI, sometimes PPI. On top of that, FOMC, I pretty much avoid completely. And NFP, if you trade Forex, avoid it completely. But if you guys trade indexes, I'm moving more towards kind of like the PPI bias where if it doesn't severely impact price, then I'm willing to trade it. So CPI is a no-go. FOMC is a no-go. And when Federal Chairman Powell is speaking about interest rates, rate cuts, and inflation, I would like to stay out of the market. Just know when Powell is speaking, and typically you don't want to be trading when he's on stage. Let me think if there's anything else to cover on that. PPI, again, see what it does to the market, and if it isn't something super drastic, you should be good, but if it is something super drastic, there's no reason to force anything. Same thing with NFP. If you guys are trading Forex, I would avoid NFP completely. It affects Forex way more than it does the US stock market or the indexes. But if it does affect the indexes significantly, I would stay away. Again, it's just purely based on seeing like, hey, did this affect the market a lot? Yes, cool, I won't trade for that day. Okay, so that's news. Moving on, I want to talk about times to trade. I covered this in a trading transformation, but I want to make sure that I cover it in the mastermind. I will always wait to trade until 9:50, and I will typically never trade past 11 unless it's for PM session, and then for PM session you can start looking from 1 to 3. Okay, so these are kind of the optimal times to trade because we know that market opens at 9:30. Okay, by just simply jumping in to a trade like immediately, you know, it's not necessarily smart. You want to give the market the ability to breathe, the ability to develop, the ability to even set up a trade in the first place. Pre-market is not able to set up a trade, right? We got to give price the ability to start setting up and pushing towards a highly executionable price range, right? That's literally part of how we craft our trade. We have our overall bias, and then we want to wait for that executionable price range to get hit. Okay, and typically those get hit within from like 9:50 to 10:10, and that's typically when I'm executing. Okay, sometimes I don't like to just limit myself to just 9:50 and 10:10 because like yesterday I took a trade at like 10:30, okay, and it was still a great trade, and I hit 2 take profits off of it. So I don't want to limit you guys to just that 20-minute window, but typically that 20-minute window, it's what ICT nerds call a macro, okay? It's just because that's 10 minutes before that big 10 a.m. candle closes, and the reason why that 10 a.m. candle close is so significant is because that's when the 4-hour closes, that's when the 1-hour closes, and then obviously all these other variables like the 15, the 5-minute, and then obviously the 1-minute closes on at 10. So we have a bunch of time frames closing at that time, and it's typically a time where market is going to be manipulated. It's typically where market is going to have the most volume because when that 10 a.m. candle closes, there's going to be a lot of movement based on whether high time frame breaks structure, whether high time frame sweeps liquidity, all of these things, okay? So that's something that's good for you guys to know. And then on top of that, I would never trade past 11 unless you guys are trying to trade PM session, and then from there I would take from 11 till 1 off. And then if you guys do want to trade PM session, which honestly, if you guys can trade from 9:50 to 11, there's no reason for you guys to be trading PM session. I think it's a little bit much in my opinion. But if you guys are unable to trade AM session, this is when I would be looking to trade for PM session. Moving forward, we've talked about this a little bit, but we'll go over it again. For stop losses, we talked about this like a couple days ago, but I want to talk about it a little bit more. Stop losses are purely just placed where your trade idea gets invalidated. So let's think, when we get to the execution part of our trading plan, right, we have our bias, price range, execution. I'll do this NASDAQ trade for an example. Or I'll do my ES trade. It's a better example. So right here, in reality, I probably could have had a tighter stop loss on this, but let's just use this as an example. Okay, so on this ES trade, my stop loss, what did I execute off of? There's a couple things. Break of structure and this bearish imbalance getting invalidated. Let's say that we didn't have a break of structure and we just had this bearish imbalance getting invalidated. I would have put my stop loss underneath this candle's wick. Because, first of all, I'm open for price to come back down and come back down into this inverse fair value gap and move back up. But what I'm not open to is price pushing all the way back down and closing back underneath this inverse fair value gap. Because again, I'm taking the trade off of this. So if this inverse fair value gap gets invalidated, I want to get out of the trade. So for that, a good stop loss would have been right here. Because again, we're still okay with wicks going down in it, but if we see a closure underneath, we typically want to get out. Okay. And then and then from there, let's say we only had this break of structure. Well, let's see, where was the most recent low where we ended up breaking structure? It's off of this. So I would have wanted to have my stop loss underneath this because again, if price ends up breaking structure back to the downside, what am I taking the trade off of? What am I executing off of? A break of structure to the upside. So if I see price break structure back to the downside, it invalidates the trade idea. So for me, I didn't necessarily have it hugging these lows. I had it underneath these lows just again, because if we wick these lows, the trade idea is still valid. Okay, so I played it a little bit safe. I didn't put it underneath this wick. I did it based off of the break of structure. And I put it a little bit underneath these lows just in case price wanted to come down, maybe even fill in this bullish fair value gap. Okay, so where is your stop loss placed? It's placed off of where, like, just think about why am I executing this trade? Okay, and then in turn, where would this trade idea get invalidated based on that execution reason? So let's show like another example of this. Let's say we see price and it's coming from these range lows up to these range highs and we fill in this imbalance and we're like, oh yeah, price still wants to go higher. And then we see price break structure right here. Okay. We break structure off this, and let's say that's what we entered off of. Where would we like to put our stop loss? Underneath the most recent low, or give it some breathing room for a potential wick down there. But why is that? Because we took it off of a break of structure, and again, if we're executing based off that, we're assuming that if price breaks structure back to the downside, we no longer want to be in that trade. Now, again, let's say we decided to take the trade off of this imbalance right here, off of price pushing into this imbalance and then rejecting to the upside. Cool, let's say, or sorry, pushing out to the upside. Let's say we take a trade off of that. Boom. Where would we put our stop loss? Underneath this low, because again, price already balanced out this price action with this wick. So in turn, we're executing based off of this price action being balanced out. So what would make this trade invalidated if price ends up wanting to go lower? You're probably saying, well, TJR, there's another bullish fair value gap right here. Well, that's not what you took the trade off of. You took the trade off of this bullish fair value gap. You thought that this bullish fair value gap was going to hold. Okay? Now, let's talk about take profits. Again, we covered this a little bit, but similar to stop losses, but it's on the other side of what would be a reason or a high confluence price range for price to potentially go in the opposite direction. Well, it's a pretty easy answer. It's just really any of our confluences. So let's go back to this trade right here. Boom. The reason why I was willing to take part of my position off was because if we look at the hourly time frame on this, overall, we are still bearish. Matter of fact, we just broke hourly structure to the downside. So when I see equilibrium off of these range highs down to these range lows, I'm going to want to put a take profit there because we're bearish and I'm trading a retracement. And what do we know about this is if the hourly time frame's bearish, we're going to want to take some profit off at this point because for all we know, price very well can reverse straight off of equilibrium and continue lower. Okay, my second take profit was based off of this 5-minute draw on liquidity. Why? Because for two reasons. It's in a discounted price range and it's a draw on liquidity where price very well could come up, sweep, also fill in this imbalance more so than it already did, and continue lower. Why? Because the hourly is bearish. And then last but not least, final take profit could have been these highs, where we can say, okay, what happens if price really was going to fully reverse and end up blowing past these highs and breaking structure out of it? Then cool, we'll have those in our back pocket. But for the most part, we got to understand what price is giving us. If price was bullish, this would have been a much different situation. I would have held that bitch. This would have been first take profit. This would have been this would have been second. This would have been fourth. But I had to understand for what price action was when it was given to me. Right? Versus if I just only had this as a take profit, first of all, price already swept this liquidity. Price already moved down. We broke structure. Right? We have to take that into account. So again, we take profits when there's a potential confluence on higher time frames that could give us a reason for price to reverse. Okay. Let's show another example of this.
I'm dizzy.
Let's do Thursday. I'll do my Thursday's trade. So on Thursday, I wanted to be bullish. Whatever, I'll skip over that. You guys can watch the trade recap on why I wanted to be bullish. But regardless, I ended up taking a trade off of this. Boom, liquidity sweep. We'll cover why I put my stop losses where they were, why I put my take profits where they were. So I took it off of the liquidity sweep. Monkey scoop. Liquidity sweep. Bearish imbalance, getting invalidated. Bullish fair value gap, getting filled. Okay. Wait, am I fucking tweaking? I did not take it off that candle. I think I took it off this shit. Yeah. Wait, no, I didn't take it on ES. That's why I was tweaking. Friday the 21st, Thursday. This was it. Sorry. We saw a high time frame liquidity sweep. Yeah, much better. High time frame liquidity sweep. Boom. This. This. Okay, I entered off of this. Again, there was a bit more to this, but overall, we swept out super high time frame liquidity. I knew that there wanted to be a retrace after this huge, kind of break this down. So we had this big leg down, huge extension. We hit a really solid profit taking point, this really high time frame draw on liquidity. We sweep it, and then we get a bullish confirmation out of it. Okay, for me, it was like bet. We just had a huge extension to the downside from these highs down to these lows. We just hit a really solid profit taking point for anybody that was in shorts. Odds are, price is probably going to retrace. What happened? We get a inversion of this bearish fair value gap. We also see price come down, fill in this bullish fair value gap, boom, get a leg up here. I took off partial positions at this 1 minute high. Honestly, I didn't even need to do this. I shouldn't have, because if we just look, this is on like low time frames here, right? I saw that price was super uber bearish, but my bias was bullish for the day. And when I saw that, I was like, I don't necessarily want to switch from my bias, and price is really oversold right now. It looks like we just made the extension down. So in turn, what can I play off of? I can play off the retracement. We hit a profit-taking level. We see bullishness come out of it, so I execute a trade based on that. I really shouldn't have taken profits here, but I did. Where is a high or a high possibility where price is going to push up to and retrace? Equilibrium. Okay, and this is on the 5 minute, right? I was really playing it safe. I didn't do it off the hourly. The hourly looked terrible off this, right? What am I going to do? Take it from here all the way down to here? It wouldn't have gotten hit. Had a big leg down, so I literally just took it off the 5 minute. The least it's going to do is hit the 5 minute equilibrium. Okay, so boom, 5 minute equilibrium gets hit. On top of that, that was my final take profit for it. But let's just draft up other take profits, other examples for this. Well, we could have had this, which looks like it ended up just being like dead on the dot, the top of the shit. Boom, what is this? We had a liquidity sweep. Leg up prior to the liquidity sweep, break of structure. This right here is an order block. This could have been a take profit, which ended up getting hit perfectly, and then price ended up reversing right back down. And then from there, if you wanted to be like super uber-de-duber risky, would be take profit up here. But there's a million reasons why I wouldn't have done that because of that huge freaking sell-off. Okay? So again, why did I have my take profit at these highs? Well, super low time frame, liquidity sweep, price is super bearish. Very well could have just like swept this and continued down. But why did I have it on equilibrium? Because we made a big leg down. We hit a profit-taking area on the high time frame. We showed bullishness coming out of it. Once we made like this 5 minute up candle, I was like, we're definitely going to go hit equilibrium no matter what, because we just hit a profit-taking point and we just had this big extension down, right? It's just like how we find our daily bias. We see a big extension down, we're going to want to retrace the equilibrium. Same thing, if we see a big extension up, we're going to want to see price retrace the equilibrium. Okay, so we see that happen. Price wanted to retrace the equilibrium. Other confluences, boom, this bearish order block. Cool. Whoa. Dizzy. Let me think. What else do I want you guys to know before I get all sad and sentimental for you guys on Monday? We covered stop losses, we covered macro, we covered take profits. We covered a lot more in this mastermind than we did in any of the other ones, for real. The other ones are pretty lost. I need to update them like for show. Let me think. News, we covered news. I guess the last thing that I would want to talk to you guys about is something that I made a TikTok on it today, but this is something super important that I realized when trading on Thursday, so yesterday. This is just kind of on some like yapping shit, but it's true. I need you guys to understand like the power of patience when it comes to trading. A lot of you guys, and I can tell based on a lot of your like trade recaps and things like that, you guys are super excited because you guys are in the mastermind and you guys learned this new strategy, you guys learned this new way to trade, and you guys are super antsy to make this, to like almost force this thing to work. And as good as that is for you guys to be excited and for you guys to want this to work, you guys have to understand that the market isn't necessarily gonna just like be like, hey, Lesno just finished Mastermind 3.0. Let's give him the best setups like the next week, or let's give him the best setups for the next month. There's going to be times when you guys don't see any setups. There's going to be days where nothing goes your way, and when that happens, I really don't want you guys to be taking trades. Because if you guys do end up taking trades, you guys are going to think the system is flawed, and in turn, you guys are going to relapse on all of your bad, unprofitable habits. I want you guys to understand that the market isn't going to give you a top-tier setup every single day. The best thing that you guys can do is see what the market gives you and try and make the most out of it every single day. You just try and make the most out of it. Some days market literally won't even give you shit, and it's like you literally can't make anything out of the market for the day because it's literally the US stock market, bro. Like, this shit is built to beat every single person that is in it. It's really fucking difficult to be a full-time trader. And a lot of you guys need to understand that as you guys go off by yourselves and start trading on your own without the help of me kind of getting on with you guys pretty much every single day, reviewing your trades, giving you guys new things to look at in the market to make you guys better traders, don't be looking for something that doesn't exist. Like, a lot of you guys, I know this for a fact, a lot of you guys will finish the mastermind. First of all, take like a couple, you guys will still be unprofitable because that's expected, right? You guys aren't going to become a profitable trader right after doing this. It's a skill. It takes a long time to do this shit. Okay? And a lot of you guys are going to be like, damn, something's messed up. There's something that I'm missing. I need to look for more. There's a reason why I call this like the blueprint to profitability. I'm literally giving you guys every tool, every piece of equipment necessary in order to turn profitable, on top of that being the funded account that I give you guys, so you guys can have capital to start off with. So when I'm said and fucking gone, I want you guys to stop, because this is going to happen, and I want you guys to rewatch this video. I want you guys to stop looking for shit that doesn't exist that you guys are thinking is going to make this happen faster, and thinking that it's just going to like speed up your progress by 10x. There's no such thing. Okay? Like, again, think back to week 1 when I was telling you guys about how this shit is a skill. This shit is really difficult to do, and just like any other skill in the world, it takes a long time to become really good at it. And just like anything else that can give you insane rewards and insane money-making opportunities, typically really high money-making opportunities, they're really difficult and it takes a lot of hard work to get there. So in turn, you guys can expect the same to come out of trading, right? Regardless of what the job is, it's going to be difficult. If it comes with making a lot of money, it's going to be really difficult to get there. So I don't want you guys to finish this and be like, okay, that's it. That was easy. A month of learning, said and done. It's like, no. If anything, this is like right when you guys step up to the start line where you guys can finally start doing shit correctly. Does that make sense? Like, A lot of you guys, no, I know this for a fact. Damn near all of you guys were doing shit incorrectly before this. Now you guys are actually able to start doing shit correctly. And because of that, I think you guys will be able to finish the race like 10 times faster because you guys have the roadmap versus everybody else is like literally running in circles, running backwards, not necessarily knowing where the fuck they're supposed to be going. Versus you guys, like, you guys know how to execute now. You guys know how to keep your psychology in check, I fucking hope. Because we've went over this multiple times. You guys know how to use risk management, I hope. So, it's kind of like, once I open the gates for you guys, and once this shit ends, we can kind of be like, okay, bet, this is when your journey starts. Because before, you guys didn't know shit, and you're probably gonna be thinking, man, bet, like, this is the end of the road for me right when the mastermind ends. Like, that's going to be the start of my profitable journey. It's not the case. Like, after the mastermind ends is the start to your journey to becoming profitable. And I really want you guys to understand that. Thinking back to thinking long term on the shit, thinking 50 years from now, just think about how beneficial the skill of trading could be for you guys 10 years down the line if you guys just stick to this shit for 1 to 2 years straight in order to turn profitable. Think about how beneficial that shit's going to be for you guys. It's pretty fucking crazy. Like, you guys can change your life over the matter of a year to 2 years, and a lot of people are not willing to do it because they want it to happen a lot faster, and that's just not how the shit works. It's going to happen a lot faster than it should happen. Like, in reality, if you guys want, like, life-changing results, I honestly think, like, it should take 10 years to get there. But it's not the case. It really only takes, like, a year or two to get, like, life-changing money or to change your life based on any sort of skill. But it's not going to happen in a month. It's not going to happen in a week. And it's not going to happen at the snap of your fingers. And that's just, like, how the shit is. People are so used to short forms of dopamine because of fucking social media. People are so used to getting those little rushes or whatever the fuck makes them feel good nowadays. And it's for a reason. They do not want people to be successful nowadays. And there's only a couple people that, like, can kind of break past that and be willing to actually sit their ass down and be like, I understand how long this is going to take, and I also understand the patience that this is going to take, and I also understand what I have to do in order to get there. And I figured I might as well sit you guys and talk to you guys and let you guys know about that shit before we wrap any of this shit up and I say goodbye to you guys. So, that's pretty much all that I have for today. We covered a lot of, like, actually relatively new shit today. We talked about news. We talked about macros. We talked about stop losses and take profits a decent amount. We did my little trade reviews. I think you guys have a good feeling now for your own trade recaps, where if you guys are trading ES and NQ, and, like, the whole point of doing trade recaps with you those 2 days was to just get you guys used to, like, what you should be seeing on the chart. Now you guys can compare it to all the trade recaps that I post on YouTube. You guys can now critique yourself. Jeez, got the hiccups. You guys can critique yourself on what you guys should be doing better within your own trade recaps, within your own journaling of your trades, and in turn, you guys will become better traders by doing that. And if you guys aren't doing that, you got... Jeez, why do I have the hiccups? You guys are stupid. So, please keep journaling your trades. Stay away from those badass habits, especially after the mastermind ends. Like, don't think the mastermind is just, like, a 1-month boot camp. Like, this shit, again, is supposed to make you guys flip a 180 on your life and hopefully turn that shit around for the better, because you guys joined this shit for a reason. You guys joined it because you guys aren't fans of the life that you guys are living right now, and you guys want something to change that. Like, there's a big reason why every single one of you guys is in this shit. It's because you guys weren't happy with at least 1 or 2 things happening within your life. All right, so kind of taking some responsibility and saying that I would like to keep it that way. So hopefully by the time I'm gone, I don't have to keep reminding you over and over again, like, hey, how are those habits going? Or, hey, are you still following your trading plan? Hey, are you still journaling your trades? Hey, are you still keeping your emotions in check? Hey, are you still using risk management? That shit should be robotic by now. It's like taking a dog to fucking like boot camp, you know? You send him away for the summer for a month and he's just like learning the shit over and over and over and over and over again. But in order for him to stay in line with that shit, when he gets back home, you gotta, keep him on that. I didn't do that with Boogie, so that's why I'm coming up with that example. Because Boogie is a dumbass dog. But, anyways, I appreciate you guys letting me yap to you guys for like the last 10 minutes of this call. I'm going to go ahead and wrap this up. I appreciate you guys for tapping in. I'll see you guys on the last day on Monday. I'm gonna miss you. You guys were fun ass mastermind for real, but we'll get all fucking sad and sappy on the last day. And there's there's also super exciting news coming to you guys pretty soon. You guys will probably hear it by the time that I'm gone, but I'll give you guys just like a sneak little peek. Everybody who interviewed you guys to be let in here, okay, everybody that interviewed you, we're doing something where you guys are going to be able to, I'm doing like kind of a networking / meetup event in Miami. It's going to be several months down the line, so you guys can like plan out your guys' schedules around it. But if the people, yeah, Connor, pop out to that shit. I'll literally pay for your flight. But if you guys want to slide to that shit, keep your eyes out for an email or the person that interviewed you. If they hit you up, the shit's not a fucking scam. We're actually running the shit. And I would love to meet a lot of you guys. It would be really fucking cool, especially several months down the line, like to see how you guys are doing. Les Nut, we can play a 1v1 in Fortnite, and if you win, I'll give you a free funded account. But with that being said, I appreciate you boys. I'll catch y'all. Peace out, mate.